Good morning and good afternoon to all our partners and colleagues. We are pleased that you could join us for another learning opportunity. This is part of AGRA's learning agenda to ensure that we are informing, sharing, and disseminating information to our stakeholders, most importantly, the smallholder farmers. This webinar will be recorded, and the recording will be shared with all the participants. There is an opportunity of asking your questions at any time during the presentation by typing your questions at the questions panel provided on the screen. Please join me in welcoming Rufaro to introduce today's webinar. Over to you, Rufaro.
Morning and good afternoon all from wherever you are joining us. Welcome to this fertilizer system webinar, which is being hosted by the Program Innovation and Development team and the Knowledge Management team of AGRA. Our moderator today is Dr. Aseta Diallo, who is the interim head of fertilizer systems in AGRA. Welcome and karibu sana. Over to you, Aseta.
Thank you very much, Rufaro. Good morning or good afternoon, ladies and gentlemen, colleagues, AGRA leadership, distinguished participants to this webinar on COVID and fertilizer sector in Africa, the impact, lessons learned, and opportunity. It's a great pleasure for me to be a moderator of this very important session around a very critical topic, the fertilizers. You know, fertilizer is one of the most important input, the fuel that powers green revolution, as our Nobel Prize Bolanomo has said. Together with seed, effective extension services, and around good agronomic practices. Even though the quantity of inorganic fertilizer applied were increasing in the region, usage is still very low in this region, according to the Abuja summit, talking to 50 kgs per hectare. So in terms of efficient use of fertilizer, most African countries, including the West African one, are still using a blanket recommendation. We are not site, we are not crop-specific fertilizer. AGRA, being an alliance and farmer-centered organization, is really committed to supporting the increase and improve of use of fertilizer by smallholder farmers to increase their productivity, their income and food security, thus contributing to the SDG 2 and also to the AU Agenda 2063. Recent statistics shows that the use and the consumption of fertilizer was growing in the continent and in West Africa region. However, with the pandemic, which we experienced this beginning of the year, maybe it's going to really affect this usage and this trend, which we have seen in the past years. So this webinar is about really to discuss and see what are the impact of the pandemic in the sector. What lesson did we learn, more importantly, which we could take forward and really try to adapt ourselves, because maybe we can be facing again some shocks, some stress. What are the opportunities that exist which we could take really to strengthen this fertilizer system, this fertilizer sector in our region? So we have 5 panelists today. We have at international level, we have Marina Simora, who is who is the Senior Director, Market Intelligence Service of the International Fertilizer Association, IFA. She will be talking how the pandemic impacted at the global level and now come to our region. To our region, we have Inosan Opuku, who is the Vice President, West Africa Fertilizer Association, who will talk about how it feel in the fertilizer sector in the region based on the pandemic and what lessons they also learned, as I said at the beginning. We know that the financing aspect is critical for the sector. And then we have Marie-Claire Kalihangabo, who is the coordinator of the Africa Fertilizer Financing Mechanism, FFM, under the FDB. And we have Jason Scapone, who is the president and CEO, African Fertilizer and Agribusiness Partnership, AFAP, who will be talking to us about the financing in this context. And then we have Mr. Kobia Asante, who is a technical advisor to the Minister of Food and Agriculture of Ghana, because we try to bring in the private sector, but also the public sector to really discuss and highlight what are the key impact, what are the key lessons, the vision, and what are the opportunities. So this topic, as I was saying, is a key and a very in the high agenda of AGRA. And then we have our Vice President, the Program Innovation and Delivery, Agi Aswime Konde, who is going to do our introduction remark to our panelists and also participants. Agi, if you are online, please take over. Thank you very much.
Thank you very much, Aseta and the team from AGRA for putting this together, but also most importantly for our panelists for accepting to join us to share the insights of what you're seeing across your different ecosystems, but also to welcome the participants that are joining us for this webinar. I think, like everybody says, I hope we are all well and safe, and we are continuing to keep our mental health in this very difficult times that we are experiencing. But having been, 100 days down the road, I believe that most of us have now come to the realization that this is the new normal, and therefore, figuring out how we will continue to do our business, but also ensure that we keep the smallholder farmer at the center of our conversations, and everything we do is critical. So for us at Really AGRA, that is why we've called on all of you partners to come and share with us what you're seeing, but also for us to share what we are hearing and learning from most of the work that we are doing across the countries in which we operate. I probably want to just touch on 3 different things which probably will be correlated with everything that you all will be pulling together. But I think one of the things that has come out most prominently is that this pandemic, like any other crisis, has really revealed the tendency for us to overlook the systemic challenges that we operate in. And like any systems, the food system has been, most exposed. I think we've kept looking at how we plant, harvest, and supply, but the interlinkages on how that whole ecosystem needs to fit together has been brought to bear in this pandemic more than anything. So, my hope is that we will take a deeper look at what are some of those systemic things that we need to do, not just focusing on fertilizer per se, because we know that there's a whole need to ensure that there is collaboration across the different interfaces for everything to really work, for the smallholder farmer to increase their productivity, address the food security challenge, but also increase their incomes. So this crisis, I believe, is an opportunity. And we cannot continue doing business as usual because it's not going to come back to that. And therefore challenging all of us to see the opportunities around, say, coordination of the sector, and also prioritizing what are the key things that we need to fix now that will actually make a fundamental change in the future, is probably a question that we continue to ask ourselves. And it would be interesting to hear from you all in terms of what is that 1 or 2 key catalytic things that we need to start fixing and eventually get to have fertilizer adoption increase, because looking at fertilizer in isolation will probably not strengthen what we are looking for. So there must be something that we will strengthen as we walk down this path. And I don't think we have answers at AGRA. We continue to listen to the people out there, and probably together we can come out with a solution. But interestingly as well, the smallholder farmer has gotten younger, they've become more connected, they are making more choices. So gone are the times when, they would be told that you just have to do X, Y, Z. They've got many choices that they are currently looking at. I think the question is whether the access is affordable, whether the access comes on time, and whether the practices that they're implementing are really the right practices, and therefore what that means for their resilience, but most importantly, ensuring that the soil health, because their only asset is really land and labor. So how do they optimize those 2 asset points that they have to ensure that they are getting more for their bucks. And then lastly, from where I'm sitting, is also to tease out on the panelists on what you're seeing with the micro SMEs, because fertilizer is delivered to the farmer through, an SME. And what are you learning from these SMEs? I mean, some of the statistics we're seeing are beginning to worry us. If we're saying about 30 to 40% of these SMEs are going to close shop, then probably that indicates in one way or another, 40% of the fertilizer won't reach the farmer in essence. But what are we learning, and what is it that we need to fix now to ensure that that SME bounces back and is more resilient when they really come back? Because without that interface, then we can't get the inputs to the farmer. And without that interface, we can't get the produce to the market. So we will be listening keenly to the experts that we have on our panel, and ask you to please pull out all the insights you have to ensure that we do the learning. But most importantly, we walk away with an action that will ensure that we become stronger, more resilient, collaborate better, and bounce back in a manner that will make the smallholder farmer healthier, happier, and better livelihood. Thank you very much, and looking forward to learning from all of you.
Thank you very much, Vice President Aggie. Thank you for this remark, which is really setting the tone of the discussion this morning. So I think we are now going to the international area, as I said, with Marina. Marina, just tell us, because you are covering many continents with the International Fertilizer Association, can you please tell us how you feel the impact of this crisis, of this pandemic across the continent, which we can also learn from?
Okay, thank you, Seta. Good afternoon and good morning, everyone, and very warm welcome and greetings to all of you from Paris. So on behalf of IFA, I would like to say that I'm delighted to be part of this important webinar, so thank you for this invitation. And I would like to start really by just giving you a quick introduction to what IFA has been doing since the start of the global pandemic. And like many companies, of course, we also this year had to adjust to new realities caused by restrictions and quarantine measures because of coronavirus. And as we represent the global industry and we have members across the entire fertilizer supply chain, what we decided to do in March this year, we set up a COVID information center, which became like a global platform for the exchange of best practices that the industry members had in terms of their response to the pandemic. So we also provided regular updates from IFA members and regional associations on the activities there. We released a series of webinars and published statements and press releases where we tried to highlight, on the one hand, the importance of international trade in the supply of fertilizers to the farmers, but also in general, the importance of plant nutrition in the overall food security. And I think I remember like a few months ago, like when in March, there was this growing concern when coronavirus has started spreading across all over the world. And but I think from the global perspective, what we have noted is we were very impressed by this joint solidarity in response to the new challenging conditions that we have started to feel was coming from our industry members. And many of our fertilizer producing members, they have adjusted and implemented a number of measures to ensure the safety of employees, and also have donated various funds to local communities in response to these challenging conditions. But also what we realize, I think also, is that the global fertilizer industry has proven to be resilient to this health crisis. And when we did an assessment around April, we counted over 20 countries in the world that have recognized fertilizers as essential products or critical inputs in the food and agricultural supply chain. And really, this status of the fertilizers as critical inputs and the fertilizer industry workers as essential workers played a crucial role to enable the industry to continue to operate in these challenging conditions, and also to ensure that the continuity of supply with green channels for transportation. And those countries, they accounted for roughly 60% of the global consumption, including China, India, France, Italy, Australia, Russia, United States, and many others. But I think also what I would like to highlight, and that's something that Eji just mentioned, is that we need to remember, and that's something that also this pandemic has really highlighted, is that the global fertilizer industry is very closely interconnected, not only with food security and agricultural systems, but various other major drivers, particularly macroeconomics, because our industry is not immune to macroeconomic shocks, and particularly when it comes to currency depreciation and volatility of exchange rates, because many countries, they rely on the imports of fertilizers. And we have seen some of the importing countries this year have gone through this volatility and turbulence of exchange rates, meaning that fertilizer costs are becoming, have increased overall. And also when we did projections of fertilizer demand for the short term, we had to look at the macroeconomic projections as well. And IMF, for instance, in April, they expected that over 100 countries in the world will have a negative GDP growth rate. So there is this general consensus view of the global recession and the slowdown of economic growth, and this has a knock-on effect also on the fertilizer demand. But another important variable when we talk about the fertilizer supply chain is the functioning of the shipping sector and global transportation channels and infrastructure systems. Because before the pandemic, it was interesting that this year was supposed to be like a major disruptive year because of the new IMO 2020 regulation, which required the use of low sulfur fuels in seaborne transportation. And initially, we have seen at the start of this year the spike of freight rates, but then unexpectedly the global pandemic arrived and there was a collapse of oil prices, which had an impact on the freight rates. And freight rates and the shipping costs, they play a major role when we look at the delivered costs of fertilizers to farmers. But also when we talk about infrastructure and transportation channels, what we've noticed that particularly some of the raw materials like ammonia or sulfuric acid or UAN, which require specialized terminals or specialized vessels for transportation and handling, there were more disruptions there compared to some maybe bulk commodities. And global politics and any governmental actions related to trade barriers or sanctions, they often can have either a direct impact on fertilizers because there are some sanctions in place, for example, in Iran, which has been struggling not only because of the challenges of the pandemic, but also these countries subject to sanctions, making it difficult the international trade. And Iran is a supplier of fertilizers to the international market. But also this year, we have seen some new trade measures emerging, which can disrupt the trade flows and also affect fertilizer demand patterns. But when we talk about trade measures, also what matters is the trade measures in the agricultural sector. A few months ago, there were also some concerns that if any new export bans on key crop commodities are introduced, that could potentially trigger increase in crop prices and some uncertainty around food supplies. But another major variable, again, when it comes to the interconnection of our industry with other broader like ecosystems, environmental systems, and economic systems, is the energy markets. Again, with energy markets, this year was also an unusual year because we had major oil price collapse, and oil is an indicator of the global energy markets affecting the pricing of natural gas. There were very interesting and unusual dynamics with natural gas pricing in some regions, which traditionally have been considered as high-cost regions, such as Europe, for instance, where natural gas prices have been very low this year. And also, we should remember that often national budgets of some oil exporting countries, they are linked to oil prices. So the oil price collapse created this the turbulence and the volatility, and also had an impact on the biofuel dynamics. And when we talk about biofuel here, there is this direct link of fertilizer demand, because some of the fertilizers feeding the crops which are used as feedstock for biofuel. So I guess I only have like a few minutes, I understand. So just to wrap up, as an initial impact in 2020, I guess maybe we can like summarize or identify that we, most of us, we were going through this macroeconomic earthquake or geopolitical tsunami and our sector has not been immune, although particularly because the fertilizers have been recognized as essential inputs. The industry has proven the level of resilience in terms of the fertilizer supply. And also we need to remember that some countries and regions, particularly in the Northern Hemisphere, they were able to go more or less smoothly through this pandemic because the fertilizer supplies were already there before the widespread of the pandemic in some of those key markets like EECA, East Europe and Central Asia, Europe or North America. But as a key point in terms of the initial impact that we expect, so we expect this year a reduction of fertilizer demand in the agricultural sector. But when we did this assessment, this survey of our global members, we do not think it will be as dramatic as it has been during the past financial crisis in 2009, when there was this massive demand destruction, simply because of the different dynamics in place that we have now. But again, we need to remember that the magnitude of that negative impact, it will vary region on region, because many factors determine demand for fertilizers, including crop mix, seasonality, domestic fertilizer supply availability, and other factors. But also what we noticed that, and we expect what we've heard from our members as well, we should not forget that part of the fertilizer products, such as urea, for instance, or ammonia, particularly in the nitrogen sector, they're used for industrial applications, and those are equally important in the overall economy. And we expect that the industrial demand of fertilizers will be hit harder compared to agricultural demand. And we potentially, on the capacity side and investment cycles, we expect some delays, potentially with some projects, and we would anticipate some further industry consolidation. But also what we've noticed that the disruption of transportation channels across the fertilizer supply chain, particularly, I think it affected the truck transportation on the roads. So inevitably, these bottlenecks at terminals or ports, when some force majeures have been announced, and quarantine measures on ships, on the crew members, and at the fertilizer producing plants. So together with the lower fertilizer demand, we would expect lower production volume as a result for some commodities, and potentially a negative impact on the international trade, with a recovery afterwards. So in general, I think just to put things into context, at IFA, we expected in the medium term, the overall slowdown of the fertilizer demand at a global level because of the increased awareness of the nutrient use efficiency and implementation special application of special products. But some regions like Africa or East Europe or Central Asia are expected to demonstrate faster growth rates compared to others when we move and pass this economic crisis and move into recovery mode. So overall, I guess what I want to highlight from the global standpoint, we have seen these major solidarity efforts, and although it's unprecedented crisis, but we have also seen this global response at governmental level, societies and the private sector, which has also been unprecedented.
Very much, Marina. Do you foresee, for example, for how long are we going to really still feel some impact of the pandemic beyond 2020? Very quickly.
So when we, on the demand side, we expected really the short-term factor is the reduction of the fertilizer demand this year, and then followed by a recovery in 2021. But again, as we know that the pandemic is not over yet, so, and then there are also risks of the second wave and uncertainties of potentially like a second wave of lockdowns. So if we're going to go through another wave of another restrictive measures, that could delay the recovery period. So there are still, because there are so many factors that play a role from the macroeconomic, shipping, and political and environmental factors that could either extend this recovery or make it a V-shape curve. So it's still too early. We can only speculate now.
Okay, thank you very much. Let's come to West Africa. Welcome, Innocent. Can you tell us, because in West Africa, the cropping season is about to start. We have already started in some areas. Can you tell us, based on what Marina explained at the global level, what can you see as the impact of the pandemic in the region in terms of fertilizer production or fertilizer demand? And also, our Vice President has mentioned 30 to 40% of SMEs are going to close. Is this really impacting the fertilizer industry? Please tell us. Thank you very much.
Right. Thank you very much, Aseta, and thank you, everyone. Apologies for joining a little bit late due to a bit of technology hitches here. So, like Marina has explained, I think our sub-region, West Africa, is one of the places where we were quick, both at government level and at regional business players level, to respond to the pandemic in a way that enabled fertilizer supply or fertilizer movement to continue almost through the entire period of the lockdowns, such that when one looks at the data available about volumes of fertilizer in place across West Africa today, there haven't been a huge impact. There's been a slight dip, but it's not significant. It's not beyond what the sub-region is capable of recovering from. Yes, a number of SMEs are generally going to be affected, but the truth of it is that since we were quick in responding in many of the countries, in a few countries where the response wasn't quite accurate at the beginning, industry players like WAFA and local associations intervened, and fertilizer became classified as an essential input to agriculture, such that across all of West Africa, I'll say from about March up until now, it's been treated as essential items. And so even though lockdowns were implemented, fertilizers were allowed to move. Like Marina said, there were bits and pieces of delay, some because of vessels that are arriving that require to be quarantined, some also because of interstate restriction in movements, in which case when a truck is carrying fertilizer, it has to go through a number of screening points while it's moving. Therefore, the period for travel from one location to another got elongated. So the fertilizer industry appeared to have been a bit insulated from the group of the SMEs that might be hugely affected. I think one of the areas where we're quite lucky is also the timing. Aseta, like you said, we're just getting ready for the season in most of our countries now. Had this pandemic struck and lockdowns began to be imposed about this time, maybe the story would have been a bit different. Or had it happened about the October to December timeframe, when most of the what you call the tender orders in most of our countries that do tenders are implemented and products to service the tenders are being ordered and imported, it would have been a different story altogether. So the fertilizer sector in West Africa hasn't been strongly hit, but I think we'll still speak a bit because of this conversation about the lessons from there, because if timing is the reason why the effect haven't been great, then how ready are we should this have happened in a different time frame? For example, if it was to be between September and December in a typical year when most of our big countries that do tenders are actually just awarding the tenders and expect products to be brought in. If that was the time that this happened, what could have been the implication? Or if it was in countries like Nigeria, where a lot of the product is, at least half of the product is produced locally, and part of it is imported just before people start farming. So if it was struck at such a timing just before farming, what would have happened? So I think we're lucky. The effect haven't been much, and I don't think the SME issues that was mentioned by the VP of Agra would have so much of a huge impact on the fertilizer space in West Africa.
Innocent, thank you very much. Can you talk about the prices? Are the prices has increased, or what did you see in the region?
So in at least at the farmer point, at the smallholder buying point, prices have increased, but they haven't increased hugely. Because what we know typically about our markets is that when you are approaching the farming season, prices tend to go up with fertilizer, usually sometimes as high as 20–30% higher. What we have seen is that prices have increased by about 10% or so in most of the markets. But the main drivers, I think, are the additional cost that is resulting from the longer period of travel for trucks to move product from ports to in-country where they are distributed, and those kind of additional issues. On the supply side, many of our countries also had some carryover stock of fertilizer from 2019 season, and so that helped in a bit to cushion the effect of what the challenges of moving product would have had for the overall rise in prices. So there are a few places, for example, in Nigeria at this point in time, there is prices of urea are rising in the local market, primarily because the major manufacturers had been out of production for the last 3 weeks for reasons different from COVID. So these are operational issues that can happen now and then. But generally speaking, one cannot say that COVID has led to more than the region of 5 to 10% higher prices for fertilizer in the marketplace.
Okay, thank you very much, Innocent. Let's hear from the Ministry of Ghana before we come back to you, still on the lessons, because there are still areas where we can learn from and really improve the way we are doing business going forward. So the technical advisor of the Minister of Food and Agriculture in Ghana, how did the Ghana government manage this pandemic, making sure smallholder farmers in Ghana get access to fertilizer for this cropping season, and then to really make sure you are food secure?
Thank you very much for this opportunity and to join this insightful discussions, especially on fertilizer, which is key to agricultural production. As a background, Ghana imports virtually all our fertilizer needs. We don't produce fertilizer locally. It's not that we are trying to put in efforts to see how we can get some local production of fertilizer done, but for inorganic fertilizer, we import 100%. We're lucky, as Innocent said, that this pandemic maybe happened after January, because we do all our procurements before January. Ghana is still implementing fertilizer subsidy, where we are subsidizing fertilizer costs by 50%, and this has been done for the past 3 years. So by the time the pandemic happened, we have already agreed with the suppliers on prices and everything. So everything was fixed. So it did not affect price determination in any way. And all imports by our companies have been very smooth. They have been able to bring it in, and it's the distribution which initially was affected. But during the lockdown period, there were some disruptions on the roads, and although goods and services were free to move, so there were some few impediments by the security agencies, but these were ironed out along the line. And because we are implementing a subsidy program, there hasn't been any seemingly challenge on the side of the smallholder farmers in getting fertilizer at the right price, because government has taken up the price, and the companies are supposed to sell it at the subsidized rate. So price hikes has not affected the farmers in any way. The few challenges we are observing on the field: disruptions of markets because of the COVID. Because of the COVID, some markets have been closed down, and the smallholder farmers, we have to travel a little bit longer to be able to access fertilizer at different markets. But it's not very widespread. It's a few areas where these are happening. So generally, looking at the fertilizer front, there isn't much change as compared to the previous years. The only seemingly challenge we are seeing with our smallholder farmers is because of social distancing and disruptions of market and the challenges of extension officers being able to reach them because of fear of contamination of the challenge. these are some challenges which we are observing on the field, but gradually it's being worked on, and things are moving a little bit good.
Thank you very much, Mr. Probia. But we also know the COVID has impacted the revenue and finance for the government. Do you still think the government of Ghana could maintain the subsidy program? And in addition, let me also mention that the government of Ghana is quite ahead of in terms of implementing also fertilizer blends through the subsidy program. Can you also tell us about it? And you also mentioned the extension agent being scared of contamination. Didn't you find any ways of really also reaching to smallholder farmers in addition to physical presence of extension agents?
Yeah, thank you very much. Yeah, on the side of government, definitely government budget is being overstretched because of COVID-19. But still, government is committed to see how best to make sure that our food security is assured. Because we have been fortunate as a country that the lockdown didn't affect our food security in any way because of the implementation of our programs in the past years, which has made a lot of farm produce or food products available in the country. For example, in the past, by around June, July now, poultry farmers will be crying for government to import maize. But currently we have excess stocks of maize in the country where nobody thinks about maize because it's there in abundance, and the new crop is coming to be the old crop, which is historic in our system. Because of that, the main stress is on government budget to be able to maintain the subsidy program. But with discussions at the policy level, because of the pandemic, government is now trying to find more money for us to reach more farmers and for us to even increase the quantity of fertilizer that we are distributing under the subsidy program. But our intention was to reach about 1.2 million farmers in 2020. But because of COVID, policy, it has been decided by government that we should increase the beneficiaries to 1.5 million. And that has implications on budget, but government is prepared to sacrifice that. Because if we get it wrong with our food security as a nation, then our national security entirely will be jeopardized. So because of that, although government has stresses on its budget for agriculture, it's trying to see the best that it can do to sacrifice to make sure that we are food secured. And on the side of the extension officers, exactly as you said, we are trying to equip them with PPEs so that they will be able to comfortably reach the farmers. But we are trying to look at using of technology to be able to reach farmers. But this area, we haven't developed much. But that is what COVID has prompted us to really look at it. So we are having a lot of discussions, a lot of initiatives, and discussing a lot to make sure that we get the right technology and start disseminating agricultural information through technology. So that is being explored to the maximum. And we think from now and beyond 2020 is one of the lessons that we've learned, that we should quickly be able to appraise ourselves with the technology of disseminating information rather than looking at head-to-head. Because for the past 3 years, the challenge was we're pushing government very hard to assist the ministry recruit more extension officers, which government did. Last 2 years, we employed about 3,000 extension officers more, but we never ever thought of strengthening the technological use of communicating. But COVID has brought us to both the front to be able to look at that critically. So that is one of the issues that we are looking at.
Thank you very much, Mr. Probia. As also our Vice President said, all sectors are interlinked. Today we are discussing about the fertilizer sector, but you mentioned now in Ghana you have maize in abundance. So meaning you also need to develop the agro-processing industry to be able to really process the maize and also have smallholder farmers getting access to output markets.
Yeah, exactly, as you are saying. That is one of the lessons that we've learned out of our initiatives. We started this our Planting for Food and Jobs initiative about 3 years ago, and the output of it has seen increases in especially maize production, because Ghana in 2016 we were about 1.5 million metric tons, but this year we're almost at 3 million metric tons of maize, about 50% added. And this is what has caused the excesses of maize in the system. And exactly as you said, what we are trying to do now is to promote agro-processing. Because of that, government is trying to secure funding for us to be able to bring a lot of agro-processing machinery to the fore for entrepreneurs to plug in and use it and make businesses out of it. So that is one of the areas that we are now promoting. And not only in maize, but in rice and all the others. Because Ghana imports about 50% of its rice. And because of the pandemic, what we realize is now we have to step up rice production. And all this is also going to increase fertilizer use, because once you step up rice production, it means we need more fertilizers to be able. That's why government is prepared to increase our fertilizers, the volumes under the subsidy program.
Thank you very much. Let me go back to Innocent. Innocent, you heard Mr. Probia saying the government of Ghana is really subsidizing and is going to increase the subsidy volume. I thought you have a question for him. What is the role of the private sector in this whole system before we come back to you? He also told us about some lessons they learned using digital solutions. You may also tell us a bit about how the private sector, your members, are now using these kind of solutions.
Yeah, thank you so much, Aseta. Yeah, I think it's exciting to hear that Ghana wants to increase the number of farmers it's reaching through the subsidy program, and therefore expand the volume of fertilizer that is brought in and distributed to farmers at 50% of the price. So it's very exciting, and I want to thank the commitment of the Ghanaian government to helping smallholder farmers. But there's still an issue that we want them to pay a bit of attention to enable private sector players remain more active across the entire sub-region. For WAFA, you know, our area of interest is the entire West Africa. I'm aware about the fact that our members in Ghana are actively engaged in the subsidy program in terms of supplying products to the program, the Planting for Foods and Jobs that the government is driving aggressively in Ghana. So a lot of our members who are in Ghana are participating in that. So it's a good opportunity for them. But what we have also seen is that a significant part of the product that is provided to farmers on subsidy in Ghana flows through the border to other countries in West Africa. Burkina Faso, for example, it's a huge influx of part of the product. I know that this year the government of Ghana tried to implement some reforms in how that program is and how the product is packaged to kind of limit the extent of flow out to the market in other countries. But we still have seen in the course of tracking during the pandemic that there's still good volumes of the product for Planting for Foods and Jobs that is going into Burkina Faso. The implication of this actually for the private players in that country is that if they do normal commercial channel supply of fertilizer, they will not be able to compete. So the product that is coming in from the border have a way of impacting their market. And you know, also smallholder farmers are very price sensitive. So when you have a situation where even if it's only 5% of the volumes in the market that come into the market at 30–40% lower prices, everybody's looking for that 40% lower price and end up not buying what they really need, even though the actual price product is available in the marketplace. So I'm not saying we shouldn't continue to expand the subsidy program, but we need to look at it across holistically as a sub-region, how that impacts in other places. And then also, in effect, part of that product is actually like a seepage from the investment of government in the subsidy program, because it doesn't end up being used by some of the farmers that is meant for. So that's very interesting to just put on the table for us to continue to work together to see how we can improve this across the region. On the issue of digital extension, a lot of our members have piloted and tried the use of these digital devices and technology to communicate extension information to farmers in many different countries. For example, OCP in some of the countries where they are working have had a structure where they have, programs on the ground where farmers are receiving information via their mobile phones. Some of our members actually have a structure where WhatsApp, as simple as WhatsApp plus platforms are set up for farmers in groups, and through that they can send timely extension information to farmers about what to do on the farm at what point. So information can actually be tailored to the steps of the production across the entire production season. Weather information can be broadcasted a day in advance, so farmers are able to take real-time decision about when it's time to, whether it's going to rain or not, when to plant, when to apply the fertilizer, and stuff like that, including even evidences that pest infestation are likely, those kind of threshold information. So I think we're very excited that Ghana is trying to look at that. I think it's the way to go for all of our countries. I believe that some of the lessons or some of the effects that behavior change that have been forced on us by COVID-19 are going to be with us for a long time, and therefore we have to quickly learn how to continue to use technology. I think that would be what I can say about that for now.
Okay. Thank you very much, Innocent. Let's move to the financing area, which is very critical for the fertilizer sector. Let's hear from Marie-Claire. You have been engaging with the private sector to support them really to develop their businesses and sustain these businesses. With the pandemic, what are the impacts? What have been really distorted because of this pandemic? Marie-Claire.
Thank you very much, Aseta. Thank you very much, Aseta. Good morning, everyone, and good afternoon from where you are. Actually, financial services were also disrupted during the pandemic, and financial institutions tried to provide minimum services, which consequently delayed the transactions that were in progress. And we had some cases of importers, for example, that had to renegotiate some letters of credit conditions, bigger collateral being requested, or in some cases even having cash payment requested. But however, business seems to return to normal in a progressive way. The fact that during the COVID-19, most of African countries have declared agriculture and related activities an essential service and have made an effort to keep borders, ports, and inland transportation routes open. This has helped to ensure that the continent's agricultural and food systems retain some resilience, though some logistical channels and subsequently fertilizer supply experienced some disruption, and financial services have actually followed the same trend. So, however, this special attention that was given to the agriculture sector from production to market has actually attracted more financing into agriculture and in fertilizer sector. For instance, the African Development Bank has unveiled its Feed Africa response to support African government on the response to food security impacts of the COVID-19 pandemic in a number of countries. And other development banks are also following the same. They are also availing financing for the agriculture, mainly inputs to cope with this current season's needs. But we may say that some transactions were delayed. Financing got some delays, and as for FFM, for example, the trade credit guarantees have been facing some slight delays. But in general, I would say that the impact of COVID was less harsh than we expected or than we thought. but rather as countries are anxious to ensure that there is no food crisis after the COVID-19 pandemic, the impact in financing the sector is rather a little positive, since we see the financial institutions putting more in financing in agriculture. I may say that, for example, the African Development Bank has been, for example, restructuring some transactions, some projects in the country to put more money into inputs, seeds, fertilizer, and crop protection product. Yeah.
Thank you very much, Marie-Claire. Innocent, I think this is good news for you. Marie-Claire, with FFM, I think you have been engaging with WAFA, discussing, and even they shared their need for financial product or financing figures. So with the pandemic, what will happen to this partnership you were already building?
Thank you, Aseta. As you may recall, we've been engaging with WAFA members since last year. And during the West Africa Fertilizer Financing Forum that took place in September 2019 at AFDB, the need assessment from WAFA members was presented and discussed. And I may say that was really timely, because now with that discussion, with that linkages between WAFA members and the African Development Bank, both understood quite better what are the needs in the fertilizer sector in terms of financing, and the WAFA members understood what are the requirements to get proper financing brought into the sector. So what came out is that there is a short-term need, for example, inventory financing, those credit guarantees to suppliers, to support intra-regional fertilizer trade. But there is also near-term need, which is mainly for fixed asset finance, which might involve trade finance to support through commercial banks to reduce importers, manufacturers, and blenders, distributors' lending costs, and ensure timely supply of fertilizer. Then FDB and the other development bank should provide targeted lines of credit to commercial banks and to support the funding of fixed assets. However, most of members, they are composed of small and medium enterprises, and where they are the main actors in the value chain that are having difficulties getting access to financing. So with this, it was really timely, because now the bank, for example, is trying to find ways of financing SMEs, either directly or indirectly. So that now the bank knows, and the WAFA members know what they required to do to qualify for either commercial banks' lines of credit or African Development Bank. But also there was a longer-term financing need, and the suggestion was to create a kind of an agri-flex fund that can operate across the range of actors and financial instruments. So I think at this stage, the interests have been raised and made it clear that African Development Bank will not reach its Feed Africa if from the top of the agricultural value chain, financing is availed for inputs. Now all of these solutions proposed are being explored, and the bank remains committed to play that role and support the sector. Thank you very much.
Yes, thank you, Marie-Claire. Thank you for this good news. Let's move to AFAP. Let me remind that this webinar is organized by AGRA, Alliance for a Green Revolution in Africa, and its partners, the PIATA members, Bill and Melinda Gates Foundation, Rockefeller Foundation, USAID, UK8, and so. So Jason, you have been implementing, supporting the private sector, the agro dealers, the main one, the retail distributors, to develop their businesses. So can you please explain us what you found has the impact of the pandemic in these businesses, in your mechanism you put in place to support financially this private sector? Hi, Jason, can you hear us? I think you are muted. Jason is the CEO of African Fertilizer Agribusiness and Partnership, AFAP. They are supporting private sector through their tool they developed named Agribusiness Partnership Contract, APCs, supporting big agro dealers, they called herb agro dealers, but also agro dealers in remote area to really facilitate access to fertilizer by smallholder farmers. Jason?
Yep, thank you. Sorry, I was on mute. Thank you, Aseta. Thank you for the opportunity to join everybody today. Yeah, I think we, as AFAP, we're looking through a financing lens, we try to separate the immediate impact of the pandemic from the more slow-moving impact of global depression, and what that's going to mean in rural economy, not just this season or next season, but in the years to come. That tends to manifest itself in three areas. One, I would call generally in the area of remittances. Now that could be international remittances, it can be urban to rural remittances, it could be some of the government investments, stress on government financing, public investments, but a stress on general things going into rural economy and its impact on farmer customer demand. And that's one area we're looking at really closely and already seeing significant impact. Our surveys, we regularly survey over 6,000 small and medium enterprises across Africa, and what we're seeing already is a reduction in liquidity, less money coming through the shops, coming through the stores, both at the retail and wholesale level. So that is a concern because that doesn't immediately correct itself. Two is what I would call a loss of other income. One of the things I think that makes many of the African markets unique in terms of its downstream trade of agricultural inputs is that as you get smaller down to the retail level, the agri dealer, if you will, business diversifies. That's not as common in Asia, Europe, or the Americas, but in Africa, it's a bit unique in that the business diversifies. Risk, income, margins are balanced. Risks are mitigated through multiple business channels. So what happens when you lose other income? When there's less household supplies going out the door, when there's less investments in other rural activity, when your husband or wife loses the other job. And again, as I mentioned before, with the remittances, it ties in because you see less economic activity at the rural level. And that doesn't, again, that doesn't happen right away. That's not the first season. That's the second, the third, the fourth. And I think it's also important to mention in that context that a lot of the models we have here, particularly the development agencies, are geared towards economic crisis resulting from either natural disaster or some sort of civil unrest, political conflict, something on that front, which is very different because there you have people staging, you have remittances go up in a political conflict. Staging and the availability of businesses to swarm in goes up when there's flooding. We just experienced that as AFAP in Mozambique with the cyclones. We saw a huge spike in business activity surrounding the affected zone. It was helpful, it was good. We can't count on that right now in a global depression. Both within the continent regionally and even back in Europe, the States, Asia, where we're talking about real depression and likely to be there for some years to come. That is of a concern to us. And then the third part is the impact the first two have on the overall, let's call it creditworthiness, risk analysis of these SMEs. I'm building on Aggie's point. Yeah, probably 30 to 40% is a good estimate of how many SMEs are under some sort of immediate threat, immediate disruption to the level of we may not be able to keep the doors open. Part of that is being driven by the loss of trade credit, constraints now on overdraft, the lack of underwriters and potential insurers, which was a problem even before the pandemic, but will likely go up, is that these businesses just simply can't fill the store. They can't get the products moving. And while I do agree with the other panelists, we've done, particularly in West Africa, a remarkable job, some of it due to seasonality, some of it due to just good early movements and governments stepping up. We've done a pretty good job on fertilizers now. At this point, what is the impact of smallholder farmer demand for these products 2, 3, 4 seasons out when we see a depreciation in rural income? And I think it's likely. We're going to have to reinvent some systems for commercial inputs delivery. Maybe I can stop there, but because it's not all bad news. It does create opportunity, as somebody mentioned. Just to name a couple, it's us to rethink delivery systems. There'll be greater demand on both domestic and regional trade of food. AFAP, we just launched with of all groups, a New York investment bank and a network of Zambian businesses, $120 million input scheme for Zambia. That's going to be affecting about 350,000 farmers. And it's all privately financed because the anticipation is those farmers' food is now more in demand. It's a good investment. It's pulling a new partner in to the equation. So these are the kind of things we look at in terms of impact. What are potentially these medium to longer term negative impacts, but at the same time, what new opportunities are coming up? And again, highlight what Aggie said about SMEs. We think the game is to keep as many of these SMEs in business as possible, even if they have to change, even if they have to restructure. And that should, I think, take a lot of the government's attention is supporting their own small, medium enterprises.
Thank you very much, Jason. Let me check my colleague Rufaro. Do you have questions so our panelists can address some of them? I know we can't address all of them, but yes, at the end we can address and share with the participant. Rufaro, do you have some questions?
Good afternoon, good morning again. I have one question from Abed. Address for Marina. He says, you mentioned that due to COVID-19 and in response to the macroeconomic dynamics, the global prices of fertilizers have gone up. This increase is happening while the purchasing power of smallholder farmers due to COVID has decreased. What do you see as the net effect of these two opposing trends on food security in sub-Saharan Africa?
Well, thank you for the question. I guess maybe just one comment. As a global association, we have strict antitrust protocols and we can't really discuss prices. So fertilizer prices. What I mentioned before was not so much as a direct reference to prices, be it as today or forecasted. It was more just talking about the volatility of the fluctuations of exchange rates and currency depreciations, because when we did our analysis of supply demand of fertilizers, every country is unique when it comes to fertilizer consumption. Some countries are more import dependent than others, and also in some cases when we say fertilizers, sometimes we also include in this group fertilizers, finished fertilizers, and fertilizer raw materials. So some countries rely mainly on finished products such as urea, DAP, MAP, MOP, etc. But others also need to import to bring in raw materials such as ammonia, sulfur, phosphate rock, or phosphoric acid, because they have downstream operating units inside the country where the finished fertilizers are produced out of those. So yes, I guess maybe I just find it tricky to answer the question because of certain sensitivities that I can't comment on when it comes to prices, but the effect of the exchange rate and the depreciation of the currencies at some of the importing regions, including Turkey or Brazil, for instance, that we have seen, it can have an impact on the purchasing power, in a sense also and affect the fertilizer affordability as such, but also from the agricultural point of view. I think we have and when we compared this global crisis with the last crisis that we have seen in 2008, 2009, we actually realized that there are a lot of differences, and we can't just purely maybe learn from the past crisis when there was this boom and bust of major commodities, but here there are so many other factors in place. So
yes, thank you, Marina. Let's also maybe
I really need to be careful around this discussion.
Yes,
it's a tough question. It's a tough question. There's someone who actually tried to help you. I said it's fair to say most fertilizer prices have been under global pressure. So it's actually quite difficult to say. And someone called Babir Singh wanted to, he says, I may reply on fertilizer prices. Price has not gone up. Is there any other question?
Maybe
yes. At Jason, you have mentioned reduced liquidity coming to agro dealers from farmers due to impacts of COVID-19. Do you think it is recommendable for the agro dealers to advance farmers with farm inputs or credit terms, or any credit terms?
That's a tricky question, because I think the cost of borrowing, most of the agro dealers aren't holding cash reserves themselves. So what they would be doing is just passing on additional borrowing at a time when interest rates will likely go up and terms and conditions of loans will be more constrained. However, I think the capacity of the agri dealers to channel credits is there and very important. What I mean by that is like public investment programs, some subsidized credits being managed through dealers is advisable, because it has the effect of keeping the dealer active, keeping the normal trade channels open, and they can sustain some business there. We're announcing a 7-country program. I think it's already been announced with the Norwegian government and Yara, called Action Africa, where we're doing just that. It's a form of assistance down to smallholder farmers who've been hit by COVID-19 pandemic, and we're using retail outlets wherever possible to channel that assistance. And again, it has the effect of keeping the dealers in the business while also serving the farmers' most immediate crediting, or in this case, it's crediting and granting needs.
The question actually went further to say, can the agro dealers loan farmers inputs and ask them to pay later after harvest? Could agro dealers survive with giving farmers in fertilizer inputs and get the money after harvest?
Some can, but again, as I mentioned, it's a bit of a tricky business, because if it means the agro dealer themselves are carrying an expensive credit for the entire season. In other words, they don't have the cash reserves to be lending out, but they're borrowing and passing that credit on to smallholder farmers. It will create additional risk and cost escalation in the products. So I did understand the question. I guess what I was saying is that they can manage the credits, but I wouldn't advise agri dealers right now to be borrowing heavily, not in the current financial markets. I think there's development assistance and subsidized credits that they can manage before I would go on the commercial markets and start becoming the, let's call it, sub-banker for a lot of smallholder farmers. It'll be tough. It would be tough for them to handle that additional cost of money.
Okay, thank you. I have a question for Innocent. In West Africa, fertilizer use is still quite low compared to Southern Africa and East Africa. How is this pandemic going to affect that? You said people had prepared, everything was ready, almost. How do you think this is going to affect? Are we going to have a big dip, or are we going to survive?
Innocent, you are muted.
Okay, all right, thank you. Right, so when I said everything was ready, let's understand that we're looking at it in comparison to the previous years. Today, the average fertilizer consumption per hectare in Sub-Saharan Africa, West Africa inclusive, is around 21 kilogram per hectare. A few of our countries are significantly higher than that, but most of the countries are around that number, and some feel a bit lower. Looking at the volumes of fertilizer in place in the supply chain across the countries, those kind of rates can still be achieved in 2020, the 2020 farming season. And that's what I meant by, COVID hasn't pushed down fertilizer supply significantly. But in terms of, are we going to, we desire a growth, and growth has always been the direction that all efforts is supposed to be geared towards. But I haven't seen the heat or the truncating of all of the efforts by COVID-19. What one is really hoping for is that we don't have a dip, but rather maintain that level of consumption, and then we can move up the ladder. I've seen a few places where across West Africa where some efforts have been made to even increase the availability of inputs. I mean, our friend from Ghana gave the clear example of how the government of Ghana want to increase the number of farmers they are bringing into the subsidy program. And the implication of that is that the per capita consumption, so the kilogram of fertilizer used per hectare, will go up. If you increase the number of farmers benefiting from the subsidy, it means a larger number of farmers are able to receive fertilizer at lower prices as against those who are going to the open market to buy, who will be limited by how much cash they have. So the average use per hectare, one would expect that to go up in that country. In Nigeria, for example, the government of Nigeria is doing something where they're targeting over about 3 million, 2.53 million farmers to receive input input on credit at 0% interest rate. Before now, the major government intervention in helping inputs reach farmers generally put the cost of funding at around 9% per annum, single-digit cost. But now, in response to COVID-19, in 2020, they're doing something unique in which they're saying this will be 0% interest rate, and they're working it through many of the actors who already have, organized farmer groups linked to their production and supply chain. Many of the major, the people we generally consider lead firms, people who are involved in aggregation, who have, some have hundreds of thousands of farmers. So that's like Jason has said, I mean, that's one way to kind of route cheap finance in a way, some kind of credit through the input supply channel. And really the program is designed so that input providers who have farmer networks linked to them and can have those existing relationships are the channel of delivering of this kind of support that the government is beginning to implement. They're very active on the ground now as the season is kicking up to roll that up this year. So that's very important. Maybe this is when I add something else I was itching to add before we wrap up, which is for us at WAFA, the biggest lesson is, like I said earlier on, had this pandemic hit at a different timing, what would have been the fate of the fertilizer industry in West Africa? One of the things we've learned is that a structure where we pretty much like live from hand to mouth in terms of supply of fertilizer in the market is probably not a completely safe method. I mean, for business, it makes a lot of sense to do, just-in-time supplies and deliveries because it reduces you don't have to have so much inventory carrying cost, and things like that. But when you have a situation like this, if it happens at a bad time, you don't have the luxury of time to respond. Therefore, we're thinking in our heads, we want to sit with, and I think AFDB, AFFM, Marie Clay, we're definitely part of this conversation as we go on this. Can we have a structure where perhaps one of the things that is possible is to develop some kind of buffer stock mechanism in strategic locations across the sub-region? We know the trade hubs where fertilizer move through, most of it that goes to the countries that don't have seaports, coming from Lomé, from Abidjan, from Dakar ports. Can those corridors be places where we can work in a mechanism, to support major producers to position some kind of inventory as buffer stock in those locations? They generally wait until somebody orders the stock before they ship. But if the pandemic had hit at some time, let's say it hit in September, October, when the Malis and the Burkinas are doing the tenders and asking for the product, it would have been difficult for the suppliers who get the order to go ahead and order and organize the product to arrive from offshore, if it was more serious. Suppose we had a lockdown where movement was almost impossible for another 1 month. So what we're thinking is that if we find a mechanism that allows some kind of buffer stock, so that while we are thinking through a solution to get things back to running smoothly, the buffer stock fills the gap. And it also helps in a sense to insulate the local consumers, the smallholders, from price variations, that can jump up, because exchange rate spikes today, I don't think they're going to be permanent. These are just reaction to to the pandemic situation, which might go down after some time. But that shock will be a big hit on the prices if all products are going to be ordered during the period when that exchange rate shock happens. So I mean, these are some of the lessons we're taking away, and we're going to put that as a major thing to start discussing with our big partners, financing partners, producers, to see how we can develop such a mechanism. Right. Thank you.
Thank you.
I will just put one more question, then I will stop. Any other questions will be answered offline. So this question was for Jason. The awareness raised on international trade and food security by the pandemic, should it not help to attract finance support from a number of financial organizations for SMEs to survive long term? It was by Antonella Harrison.
Yes, absolutely. In fact, I think in terms of prioritizing the development financial institutions on the continent, Marie Claire and I talk about this all the time. have to find ways to effectively keep the major suppliers, major buyers actively engaged with small medium enterprises, and that's going to require a considerable amount of both trade finance and fixed asset financing through the next several seasons. The reason I think it's important is because if these are under stress and they begin to fall off, it has a negative impact on local employment, local tax base, even on the prices, and both in terms of the inputs and also what they get for the output that the farmers will receive. If you look at all the recent studies on how SMEs have positively impacted the agricultural economy, it is always hinged on them being liquid, them being in a position to, as the previous question asked, supply products downstream, bring credits downstream, pull product out of large markets at a scale that will be received by farmers, farmer groups, networks, grower schemes. So yes, and I think Innocent and Marie-Claire have been discussing with some advising from AFAP, even the idea of like an agri-flex fund that would specifically target SMEs and their unique financing requirements. All over the world, small, medium agribusinesses have fully dedicated financing facilities. They don't just rely, if you're back in Europe or in the States, you're not running into Barclays or Citibank to get your agricultural loans. You're going to a specific agribusiness farm financing facility that deals with the seasonality, deals with reductions in interest rate, looks at the mitigating various risks along the value chains. So yes, now how far we've come with this, not where we like.
Okay,
we got to move faster.
Thank you so much. I'm handing over to Aseta now.
Thank you, Rufaro. Thank you for these questions, and thanks to our panelists for responding to these questions. As we mentioned, you may need to respond to some of them later on and share with the participant. So before I wrap up, maybe let me just give 1 or 2 seconds to each of you to quickly tell us what is your take in this discussion, what will be really doing like effort going forward to really handle this pandemic and make the fertilizer system more stronger. Let's start with Marina at the global level.
Yeah, thank you. Well, I found this whole discussion very insightful, so thank you very much to all the panelists for sharing their views. Maybe just to recap from our standpoint, in terms of mainly focusing more on the opportunities, and I think I will probably not say too much new because some of those issues have already been flagged up or mentioned. I think this health crisis really what happened, it was like a global test of the resilience of the food system, food security, and potentially there is this opportunity also to reassess the functioning of the domestic fertilizer market and the stages of the fertilizer supply chain. Because if you think of it, let's say there is a producer in Russia somewhere producing a fertilizer that then needs to get delivered to a market in Africa. There are so many stages, multiple stages across this fertilizer supply chain that that product needs to go through, and then eventually affecting the affordability of that fertilizer elsewhere. So we think potentially maybe there will be a whole revisiting of investment programs also in line of the bigger trends of reducing carbon footprint and focus on maybe a new momentum for the renewable energy, because we know there are a lot of initiatives in green ammonia, in particular in the nitrogen sector, and maybe there might be some kind of like a new focus on investments in small scale capacity units close to the consumption areas to ensure that food security and the resilience of the fertilizer supply chain and systems. But also what we've noticed when we looked at a number of quarterly results that have been published by some fertilizer producing companies, they have already picked up that there is this increased demand for digital offerings. So we would expect that there might be new investments and the development of new distribution channels in terms of the delivery of fertilizers using online digital platforms.
Thank you very much. Let's hear from Mr. Krovia.
Yeah, thank you very much, and I've enjoyed the discussion. Yeah, as a nation, I think our primary aim will be to see how best we can tap in and have some local production of fertilizer. In fact, that is key. Once such pandemics happen, import becomes a challenge. And for the future, Ghana, unfortunately, we are producing a lot of gas. So we are in contact with some investors to see how best we can start local fertilizer production and the digitalization of platform for fertilizer distribution to be able to minimize the impact of smuggling. I think these are some of the issues that we are looking at. And the private sector, as was alluded to, Ghana relies solely on the private sector to be able to, and we think all partners helping to develop our private sector so that they will be able to do efficient distribution of fertilizer in country is something which we welcome at the policy level. So welcome suggestions, inputs for us to have an efficient system of distribution of our inputs, and also how to be able to come out with our own production. Thank you.
Yes, thank you very much, Mr. Krovia. Let's hear from Jason. Hello, Jason.
Hi. Yes, I'm sorry. I cut off on the question a little bit. Could you repeat it?
No, you tell us as a final word to wrap up what you see as opportunities going forward on which we can really put effort to strengthen the fertilizer system, fertilizer sector in Africa and the West Africa region.
Well, I think right now is the time. We've talked about it for years, but to really begin looking cross-sectorally and integrating various subsectors of the agricultural economy. So what I would look, again, I put a lot of attention on SMEs and SME financing. I also think it's time now to reach out to those who will benefit from increased domestic and regional food trade, and to get them into the investment financing cycle. It's hard to look at fertilizer financing just in isolation. There's some good trade credit guarantees work being done by Marie Claire and some others, and I think that's important. But beyond that, I would look at integrating more of the financing mechanisms between sectors.
Thank you, Jason. Innocent, in terms of private sector in the region, what can you say to wrap up the discussion?
Right. So thank you very much, Aseta. I think for us, the time is, there's no better time to focus again on something we've been speaking about for a number of years now, the sub-regional integration, a higher level of sub-regional integration. I mean, when the pandemic struck, one of our first point of communication was to ECOWAS, to say, hey, ECOWAS, every country in this sub-region need to see fertilizer and other inputs as essential, even though some already saw it, but in some country statement, it wasn't clear at that point how these commodities served. And that was quite useful because ECOWAS also engaged with all the countries, and that decision appeared to quickly go through all the countries. But that is difficult to do at the global scale. What that tells me is that leveraging on the resources, the competencies, and the strengths we have in the sub-region will also improve our ability to be resilient to those kind of shocks in the future. So ensuring, for example, like nitrogen that is produced in significant amount in some part of the sub-region, Nigeria, Ghana just spoke about the intention to add to those volumes from Ghana by Ghana, setting up a production plant with private sector investment, and making that be the main source of serving a lot of the players across West Africa, and vice versa for other things that we have natural competencies for. They're going that way, we might be able to improve our local contribution to our consumption to as high as 2/3, so that at the end of the day, we're less dependent on import and we're safer should we have shocks and easier to respond to. So those will be my closing words. Thank you.
Okay, thank you very much, Innocent. Marie-Claire?
Thank you, Aseta. Before maybe talking about opportunities, I wish to say some few words about lessons we learned in financing sector. Actually, rapid response before the farmer gets in the farm, before even the fertilizer sector start distributing inputs, there is a need to secure financing. So that's the starting point. And that means that the financial sector, we need to be very quick, proactive in securing solution, short and rapid solution for financing, so as the fertilizer sector and the agriculture sector can move forward in producing food we need. Second, we have these electronic or digital solutions to financing. It has proven very important now to promote them, so as in case of this lockdown, you are able to sit back at home and do your transactions and ensure that those who are your clients are able to get access to their financing. Number three, smart subsidies, actually, because now it has proven that though it's the feeling about subsidies is quite mixed, but now it's really important to show that those smart subsidies are really important to support the smallholder farmers to get inputs on affordable prices. I think those are main three lessons that we learned from the bank, and that's why even the bank is trying to support government to secure financing, to provide inputs through smart subsidies. And opportunities, they are there. There are many opportunities. Financing is now being availed, as I mentioned previously, but also this pandemic has raised awareness and interest to the nations to prioritize local production of food instead of importing food. So this is a huge opportunity for Africa. So by producing locally, we need inputs also, fertilizer produced locally, and development banks are available to support financing the fertilizer production. This attention also being put to SMEs. They mentioned that there is this possibility of having 30 to 40% of SMEs closing. It's a very concerning, since actually SMEs do contribute 80% of the sector in the fertilizer sector. So the solutions have to be provided, and that's why now there is this interest in supporting SMEs. And lastly, intra-Africa trade. Now we have this African continental free trade area that really Africans we need to explore to do intra-Africa trade, intra-Africa movement of fertilizer, intra-Africa movement of food, intra-Africa movement of inputs. Thank you very much.
Thank you, Marie-Claire. Thank you all, the panelists. I think we really had a fruitful discussions. We highlighted some impact, but hopefully the impact is not very high for the fertilizer sector, fertilizer industry in the region, even at global level. And we more importantly highlighted opportunities going to digital solution together in terms of extension, but also in financing area, as Marie-Claire mentioned. We have opportunity also to develop, to see increasing food demand at the local level, meaning boosting really our productivity internally in the region and in the Africa in general. You talked about restructuring SMEs for them to play their role, which is really very important. And Marina mentioned the fact that this pandemic is actually even a good impact because it has tested our resilience to be really to adapt or to mitigate shocks and stress. Going forward, this will help us really respond to other shocks coming. We don't hope they are coming, but let's cross our fingers if they come. We are now equipped to really be facing these shocks and stress. We have learned a lot of lessons, like Marie-Claire mentioned, securing financing, integration mentioned by Innocent, and the African Free Trade Continental Area, which is also an opportunity for us, but also has lessons. We mentioned we need solidarity and putting our effort together, and also integrating the agriculture sector, because when we are talking fertilizer, we have also to talk about good seed, we have to talk about good agronomic practices, we have to talk about effective extension services, and we have to talk about agro-processing to make farmers really get return on their investment. So I would like to thank you all. As we said, let's put our effort together to enable smallholder farmers to access to quality fertilizer, but also quality input. This is what will lead to agriculture transformation, and the collective effort across the continent is really clear. We said the region has assets that can be leveraged really for driving agriculture transformation, including the growing number of fertilizer producing and blending companies. Nigeria alone has more than 30 blending fertilizer plants, which could really produce for the region, and as Innocent mentioned. We can see the improvement in terms of infrastructure. We can see the Lome port, which has been improved. We have a port here in Ghana. In Nigeria, we have so many ports. In addition, we have raw material. The Sub-Saharan Africa has raw material to be used for fertilizer production in the region. And also in the region, we have, as you mentioned already, raw material which could be used to produce quality fertilizer. We have phosphate in Senegal, for example. We have gas in Nigeria. We have gas in Cote d'Ivoire. We have it in Ghana here. We believe, as we said, availability and affordable inclusive finance models will be required through all the fertilizer and output value chain. This is really very critical. And developing public-private sector partnership can be used to enhance the private sector capacity to develop cost-effective procurement and distribution system. And as we said already, each country should take advantage of economy of scale and complementarity. This should really increase smallholder farmers' productivity, income, and boost the food security for the region and for the continent. I thank you all very much. Thanks to our panelists. Thanks to participants for following this webinar. Thanks to our colleague of AGRA. Thanks to the leadership which allowed us to organize this webinar. Thanks a lot. Let's keep safe and be prepared better. Let's cross our fingers we don't face this kind of pandemic again. Have a good afternoon. Have a good day, Jason. Thank you very much.
Thank you.